Hello and welcome to another edition of Banking the Future. I am Wole Famirewa. The program is a series of special discussions that delve into the ongoing evolution of financial services in Nigeria. It's in partnership with Union Bank as the lender commemorates a century of banking business in Nigeria. On today's program, we take a look at how Nigeria can grow its non-oil exports, and we also explore the opportunities that exist for the country to capitalize on both intra-African and international trade opportunities. We intend to discuss everything from Nigeria's business ecosystem for non-oil exporters to the schemes that the government and development finance institutions can activate to enhance value addition with respect to exports. And joining me to address these issues is an interesting panel of operators in Nigeria's financial sector. My guests are Emeka Okonkwo, Executive Director, Corporate Banking and Treasury at Union Bank. Kola Masha is the Managing Director at Babangona and former Technical Advisor to Nigeria's Agriculture Minister. And Wahid Olakunju is the Executive Director for SMEs at the Bank of Industries. Gentlemen, thank you so much for joining us today. Emeka, I want to start with you and if you can just review your thoughts about the ecosystem that is supporting non-oil exports in Nigeria today. It's become a huge buzzword, especially in government circles, that we need to move away from oil. But practically, what are we seeing in terms of entrepreneurship, government programs, and so forth?
Okay, thank you very much for that question. The first thing is really, as a country, what are we best suited for in terms of export? Because you deal in an international ecosystem where people actually play to their strengths. So as a country, you can only do best when you export things at which you are competitive. So look at Nigeria. What are we really that competitive about? It has to be around agriculture.
Sure.
So we know historically we used to be strong in cocoa. We are still strong in cocoa. You have rubber. You have things like sesame. People talk about the non-oil mineral activities. Well, there's a bit of activity there, but most of it, I don't think it has reached the structure and the traction that we can say this is where it is in the marketplace. So let's focus a little more around agricultural products. Sure. Talking about cocoa, talking about maybe things like sesame seed, rubber, and things like that. The first thing is you take a normal entrepreneur who is in the business of, let's say, exporting cocoa. I understand the gentleman that you talked to earlier in the day is into cocoa business. The first thing that you have to worry about is, are there people who are middlemen or are there people who are farmers? Most of the times you find that the guys who actually get involved in the export are not farmers. What they do is to aggregate. They either work through cooperatives or some kind of contract farming. But what they do also is they try to aggregate. Now, there is this interplay between the farmers and those middlemen. The farmers are becoming suave in terms of knowing what the pricing is in the marketplace. They're actually no longer in a position where they allow the middlemen to take advantage of them. So the market is becoming more efficient, and you find a situation where these guys who are the middlemen, they are the guys who need the kind of support in terms of financing that may be necessary. So what do you see with them? They come to a bank and they are looking for facilities. If you take a typical entrepreneur, you find out that it's not in all cases that they have something that they can give to a bank as collateral to be able to get facilities from them. Banks are finding smart ways around it in terms of collateral management. It's not like the preferred route for banks, but again, it's something that most banks find a way to do. So you have the financing aspects of it. A lot of them also talk about things like really the difficulty around doing business. You know, many of them, they don't just take the cocoa and export. Some do, but if you really want to make a bit of money, you want to do a bit of processing, okay? Maybe make it into paste or butter before you send it out. So when you get into that area, you get into the realm of, trying to set up your own manufacturing activity. And you really begin to come in contact with what people talk about when they mean the ease of doing business in Nigeria. The gentleman talked about access to power. It's a big issue in terms of how much it takes to have predictable power. They talk about things like multiple taxation. The gentleman was very impassioned about how much everybody feels like the guy who is into manufacturing is a sitting duck. You have 10, 12 people walking to your office every day. They basically are asking for all kinds of tax or levies or the other. Okay, beyond that, there are also things around basically doing the export itself. One of the reasons why we have a bit of problem doing that, even importing, is that our port activities, they need to be made more efficient. In addition to the high cost of essentially moving through the ports, you have a situation where really the process can take a long time. So if you put all that together, you'll find a situation where by the time the good actually goes out of Nigeria into the international marketplace, it might not be as competitive as you want it to be.
Let's hear from Kola. You've obviously been following agriculture in Nigeria for a very long time, and he has hit the nail on the head. That appears to be the big focus if you're looking at non-oil exports right now. So what's your assessment of the ecosystem and how it's evolving right now?
Well, I think I 100% agree with my fellow panelists that the reality is that the ecosystem today has some fundamental challenges, right? But the reality is that we can, they're not insurmountable challenges. So if you take, for example, a country that can produce pretty much almost exactly what we can produce, which is Thailand. So at the end of the day, when you look at what a country can produce agriculturally, you have to look at the lines of latitude. Nigeria is 4 degrees and 14 degrees. If you follow that around the world, Thailand is smack dab in that same lines of latitude. Today, Thailand exports $35 billion of agricultural produce. Nigeria, if we're lucky, is doing $2 billion. Now, the key difference there is that Thailand has focused on producing products that they consume domestically. So they and target those as their major export opportunities. Because what that encourages is that you now are able to create economies of scale internally within your market that you can leverage to really dominate on the export market. Sure. Brazil did the exact same thing with beef. If you look at a lot of these other markets, they've done very similar opportunities. That's the first piece. The second piece is now really ensuring the alignment across the entire value chain to ensure that the investors in that sector are in some way protected, to ensure that that it attracts additional investments, which in turn creates additional economies of scale. So take a prime example. In Nigeria versus Thailand, it costs 3 times the amount to export the same container from Nigeria versus Thailand. Right? You talk about the issues of multiple taxations, you talk about the issues of ensuring that the government provides, focuses and aligns its incentives and structures behind those core, we're talking about 3, 4, 5 value chains that really make up about 80% of the export revenues. Right. So it's about, I think Nigeria has an opportunity to focus, move away from thinking of export in terms of the current things that it exports, which quite frankly, the things we export today are things that most other countries cannot produce. So that's really, our competitive advantage is that we can do it. So the reality is that's only going to take us so far. What we need to start thinking about is what is it that we actually consume domestically, can focus on producing and become best in class at, and become massive exporters.
Very useful points made there. But it's not all doom and gloom. I think we have seen some progress, and I'm sure Mr. Lagunju can tell us more about that. As you also reflect on the ecosystem, can you just speak to what you're seeing at the Bank of Industry in terms of entrepreneurship that is moving into non-oil exports?
Yeah, like everybody has agreed on the panel that we've got to focus on areas where we have competitive advantage relative to other countries. Because when you talk about exports, it's mainly competition. We're not the only producers of most of these things. Others are also producing them. Yeah. We've been able to make some progress. There are challenges clearly well. We have some customers who we've been able to support over the years who are operating in many sectors of the Nigerian economy. Agriculture, yes, we have a lot of strength in that area. We have some of our customers who are able to export, although they could do much better. Solid minerals is an area where we have the lower hanging fruits. The capacity you require and the time you require, right, to add value to our solid minerals is not as much as you would require in agriculture. In agriculture, for instance, you need time to identify the land, clear the land, plant, nurture what you are planting, harvest, then add some value, process before you can export. So you're looking at maybe 3, 4, 5, 6, 12 months to be able to achieve that. But in the area of solid minerals, if you go to somewhere like Niger State, for instance, I was driving along Kafengoro and I saw Nigerians digging pits about 3-7 meters, and they're able to come up with heaps of laterite, what I call laterite, right? And they were washing, they were processing, and I saw gold. And there and then, there were people buying the gold from them with their calculators, buying in dollars, right? And then in different parts of the country too, there are lapidaries, right, where they apply heat to the gold, they come into bars. All these processes can be achieved within 2 weeks. And there are people who are ready to buy this in dollars and off.
Yeah.
Most of these things are unrecorded, right? And billions of solid minerals are being exported out of the country today, particularly through the northwest axis, but they are unrecorded. So we are working with the Ministry of Solid Minerals. We're on the advisory board of the Solid Minerals Development Fund and in other technical areas as well. We're also working to build the capacity of Nigerians. We're working with the L'Oreal Schools of Mines, for instance. We've conducted about 8 capacity building programs across the country, called from training to trading. Where Nigerian youths, especially micro, small, and medium enterprises, are being taught how to identify solid minerals, how to process solid minerals, how to add value to them. And solid minerals of a cube of sugar could go for $1,000, $100,000.
Depending on the...
Exactly, that's what I'm saying. It depends on the type. Yeah. So those are where we have the lower hanging fruits, right? And you don't have as much challenges exporting them as you would for agricultural produce. You have to go to the ports, you have to get the relevant regulatory authority. So for me, we're supporting areas where we have the lower hanging fruit. And then in the medium to long term, we're also doing quite a lot in agriculture too. And then instead of manufactured goods, I was in Kano last week, touring industrial projects that are made in Star State. And we're quite excited that a number of our customers are able to export, talking about intra-African trade, to countries like Niger, Cameroon, Chad, Togo, and even Cote d'Ivoire. Of course, the challenges are there, infrastructure. With better maritime services along the West Coast, we'll be able to do more. But a lot is being done too by road.
Right.
So the more of this infrastructure we have in place, the higher we'll be able to do in the area of intra-African trade.
I think you've hit a very important point, which is small businesses. And when we look at a lot of the businesses that are involved in non-oil exports today, they're pretty much, I mean, if I was to put an estimate out there, probably 90%. But Kola, just want your thoughts on how we can harness this, because he mentioned aggregation earlier. Sure. Your thoughts about what we can learn from places like Thailand and how government policies can really bring finance to take these SMEs to the next level.
Well, I think the reality is models of effective aggregation have been very powerful across the world. Take, for example, the textile space, right? Today, the world's largest fashion company is Zara. Most people don't recognize, but Zara doesn't have one centralized manufacturing, but they work with a bunch of different SMEs and actually somewhat of a akin to a franchising type model, have all these disaggregated individuals who are working, businesses making a lot of money from themselves that are then feeding into this global supply chain. And that's something that we've focused on as well. So effectively what we do is we franchise thousands of grassroots level farmer cooperatives and support them with a full suite of services to be highly profitable and productive. Now those types of models can be very successful because the truth of the matter is SMEs have a lot of challenges and risks associated with them. And when you're able to put them into these types of franchising aggregation models, you're able to de-risk them significantly, enable them to increase their productivity and profitability, enable them to focus on what it is they do best.
But just to clarify, as you continue to explain this point, do you essentially provide debt or equity capital to these businesses?
So we focus exclusively on debt. So we focus on meeting their working capital requirements.
So you're essentially lending them money?
Well, it's not just money, because if you look at what an SME requires, an SME requires knowledge, an SME requires the capital, an SME then also requires support on the procurement side to ensure they're able to leverage economies of scale to buy their inputs cost effectively and ensure they're getting the best quality. And then actually the most important thing the SME needs is actually marketing support.
Right.
And so we provide that full suite of services to these thousands of SMEs, which in turn work with several individuals. So today we're working with close to 20,000 farmers through this network. By 2019, we expect to hit about 100,000. By 2025, close to 1 million. And so it's these types of models have proven to be highly scalable.
Right. And do you want to reflect on this model of aggregation and how we can really get finance to some of these businesses?
Okay, let me focus a bit more on the financing bit, because that is where, you know, we make contact within what we do on a day-to-day basis. The first thing is, if you try to start from the basic unit of entrepreneurial activities, which is on the basic mom-and-pop activity company, you find out that most times the first challenge they will face is around capital formation. These guys want to approach a financial institution for a facility, and you think about how they form capital that they will use to start a business. Over time, we've sort of tried to work with various aspects of government on how to improve this, and we see that what is most easily available for entrepreneurs is the land that they have. Because even if you take it down to our local governments or our rural areas, most families, there is some ancestral land that they have. So if you take the average farmer in the village who has a small farm, at least they are farming on their own piece of land. So you say, how do we leverage this piece of land to enable them to have, you know, financing to be able to do the business that they want to do? But then you get into the issues around how you're able to register this land, the documentation, the process of conveying it and making it, you know, suitable for bank to use as a collateral for facility. I am aware that the central bank is looking at trying to make this somewhat more efficient, but because it's such a fundamental issue that some of it is even constitutional, is something that will take a bit of time to resolve. The second bit is trying to see whether people can deploy other assets that they have. Maybe if you have like a car, if you have like equipment, maybe the freezer you have, the fridge you have, if there's a way you can basically leverage that or form capital to be able to access money to do your business. There is also this initiative that the central bank is doing where they want to form a registry where people can, you know, basically impute some of these things and leverage it to form capital. So that is important. The other question that is important to consider is really whether your normal commercial bank is really well suited to finance the activities of, let's say, farming activity, for instance. And what we see is if you have a situation where I, as a commercial bank, lends money to an agricultural activity, the first thing is you find there's a bit of disconnect because you are dealing with things like climatic outcomes, you are dealing with things like the harvest season, you are dealing with a lot of things, and it's even important to consider whether you should expect a farmer to come to a bank for a commercial loan. In some countries, they have formed specific agricultural banks to deal with that because they recognize that risks are different from the commercial risk that you face on a day-to-day basis. So to that extent, even though the banks try to manage it, do it in such a way as to make it, you know, amenable to the activities, but my own personal conviction is that we need to find a way to make sure that the risks of, let's say, farming activities, agricultural activities are amenable to the bank so that they're able to take that. The other issue I can think of is really how feasible it is to expect that farmers are able to deal with the kind of interest rates that we are forced to charge of them. In many instances, many of them will argue that beyond 15–20%, they are not able to operate effectively, and that is also something to consider. So these are some of the things that we see today that, if given serious attention to, we believe that it can actually unleash the significant potential that we have here.
But it appears they are making some progress. And before I come to you, Mr. Alagunju, I want you to maybe react to some of the points he has made about the risk associated with lending and borrowing costs. How are you making progress at Babangona?
So I think very, very valid points. Now, I'll take them in two buckets. So on the risk side, 100% agree that there are real risks of lending to agriculture. However, there is also a very high level of perceived risk associated with it, because the truth of the matter is that you've had individuals that have been in agriculture that may have not followed appropriate practices, and for that reason failed for reasons that were actually more to do with management than the than the risk associated with the sector itself. So I think in this country there is a very high perceived risk, and I think we've been able to help ameliorate that to some degree by demonstrating with now 6 years lending to thousands of smallholder farmers, millions of dollars, and we're operating at a 99.99% repayment rate. Now, but the reason we've been able to do that is by ensuring that we focus in on those real risks and create an effective set of mitigants to do that. So, for example, on the issues you talked about that are outside of farmers' control. So we've actually, over the last 3 years, worked with insurance partners both here in Nigeria as well as outside the country to develop not one, not two, but 3 insurance products that help to protect farmers from those externalities that are completely out of their control. Take, for example, price risk. Take, for example, drought. Take, for example, pest and disease, so on and so forth. And create affordable products for farmers that are highly scalable at the same time to protect them. Right. Now, on the issue of being able to absorb a cost of capital, I also hear that argument quite often. And I'm a firm believer that if a business cannot absorb whatever the going cost of capital is for the environment that it's in, it should really question whether it should be in business.
Absolutely.
And I think many organizations complain about the cost of capital, but the truth of the matter, there's so much opportunity to increase productivity and efficiency in their business so that they can afford that cost of capital. So
in a sense, there's that perception from the entrepreneur themselves that they can't afford it. But
exactly.
if they get some help and
if
advice,
they
actually can.
Increase their productivity, then they can. So look at example farmers that we work with. National average for maize is 1.5, 1.8 tons per hectare. We take those farmers in 1 year, we can take them to 4 tons per hectare. At 4 tons per hectare, they can start to absorb a more commercial cost of capital, while at the same time ensure that they're making enough profit to make it a viable opportunity for them.
Senator Gunju, can you reflect on some of these points and your experience at the Bank of Industry?
Well, it's capital varies. Are you talking of debt? Are you talking of equity? Most cases, when you talk of capital, everybody rushes to the debt level. But that's not where you start from. I will always talk in favor of small businesses. You start from your own savings. You talked about mom and pop. And then people around you, family members and friends. And there are even people who have equity, who have their resources, who have their savings, who are ready to put a stake in your business once they are sure that you have a good business model, right? And there are practices that are in line with global best, operations. And it's clear that you're a credible entrepreneur. And you're able to, I want to believe that we have more resources out there begging for outlets to invest than investment opportunities. And I've always contended that Nigeria has never been short of resources for supporting SMEs. What we don't have are suitable, bankable, or fundable proposals, which speaks to the capacity issue that he talked about. So let's start from helping to build the capacity, helping to support our entrepreneurs across all boards, agricultural sector, soil minerals, and other areas. Once they have a good business model, the funding will always come.
Right.
And if you don't have a good business model, money will run away. Like I talk about some of our customers, Telma Farms, they produce vegetables somewhere in Ijebu, and they're able to export thrice to London, and they're not able to meet
Thrice a week
to London. And they're not able to meet the demand out there in London. They took a loan from us under the Dangote Fund facility, which is at 5%. They were able to repay within record time. And we said, today, come and take more. He said, no, I'm okay. Let me operate with what I have. And it's doing quite well. So we need to replicate more of those successes across the country. And by the time we aggregate them, we'll achieve. So let's start from that level rather than from the top. And then we'll start talking about the cost of funding and the infrastructure here and there. People are still able to operate viably and efficiently once they know their environment.
Right. Do you want to add a few more comments on this point before we go on the break?
No, yes, actually. These are very valid points, and I'm happy it's coming from somebody like you because you are in the center of basically looking at how to provide funds to people who are involved in sectors that they consider priority. And most of what you've done, we from the banks, we've actually been able to appreciate that. Two things. The first one is I will look at a situation, or rather what we should be looking at as a country is a situation where we create the critical mass around the export activities, such that with time we begin to have numbers comparable to what we get from oil. Everybody knows that the future of oil is at best tenuous going forward, and what I think we should be focusing as a country is essentially finding ways to diversify away from our dependence on oil to essentially other sources, and discussions such as this are very relevant to that. The second bit is around how we should also help farmers basically add value to whatever it is they produce, so that they get more out of it before it actually goes out. What Kola and his people are doing is very important and relevant to that. One of the things that I know that people, policymakers have been struggling with is how to, number one, improve preservation procedures, so that a situation where people bring out the crops before they take them to the point of export, most times the yield at that point of export is today not very good, it's very poor. So one of the things that I think should help is around trying to find a procedure or process whereby we're able to preserve the yield from the farm to the point of export, so that more value is created for the farmers themselves.
Very fair point. I do have to take a short break now. We'll take a short break right now and continue our discussion on growing Nigeria's non-oil exports and the opportunities to expand regional and intra-African trade. When we return. Welcome back to this special panel discussion on growing Nigeria's non-oil exports. My guests are Emeka Okonkwo, Executive Director, Corporate Banking and Treasury at Union Bank; Kola Masha is the Managing Director at Babangona and former Technical Advisor to Nigeria's Agriculture Minister; and Waheed Olagunju is the Executive Director for SMEs at the Bank of Industry. All right, let's now take this discussion to regional trade. And we've made the point already that a big part of agriculture and pretty much SME activity and not just export activity, but everything is really SMEs. So there's a need to begin to address the needs of that critical segment. But as we are trying to explore the opportunities in the region, I want you to start by just sharing your perspective on the smart thinking we can bring to bear in how we address SMEs as we try to, one, formalize trade in the region, and then two, of course, grow the numbers.
Well, we need to help them become more and more efficient. In other words, help build their capacity. One of the very fast ways of doing that is localizing their businesses, having industrial parks, urban industrial parks, where they operate in a localized environment. It reduces their startup costs. It also reduces their operating expenses, right? It enhances their capacity to support one another. That could be synergy, right? When you have an industrial park, they share common facilities, power, water, sewage, security, and many other things. So when that happens, their competitiveness becomes highly enhanced. It also makes credit administration easier. Because when they are localized, you don't need to ask for governor's consent to mortgage or COF or whatever, right? And when they are more efficient and that they become more competitive, therefore they can then, when they are competitive domestically and internationally, then they can export. Take advantage, not in the negative sense, or be able to assist neighboring countries, for instance. They have very weak manufacturing bases. Most of our neighbors, the economics are not right for them to go into manufacturing. So a lot of them depend on manufactured products from Nigeria. But they are unrecorded, they are not documented. So we need to have more of these formalized. We need to organize them more, right, across our borders, right? And the more of this we're able to do, the more funding they're able to attract, particularly from long-term development finance institutions like the Bank of Industry, like the Nigerian Export-Import Bank, and then even also the Bank of Agriculture, when it comes to adding value to our agricultural resources. And then, of course, the Solid Minerals Fund that has also been set up by the federal government. So the emphasis is targeting SMEs in the country so that they'll be able to operate more efficiently, and they can export more to African countries. A lot of goods move from Kano through Maiduguri, according to the governor, to Central African Republic. More used to prior to the insecurity challenges they had.
Sure.
But now things are beginning to return to normal. And the governor once told me that at a point in time, the bank he headed in Maiduguri recorded the highest cash transaction in Africa on a daily basis, attributable mainly to intra-African trade.
And very informal, I imagine.
Informal, yes.
Okay, so, Kola, can you just speak to how we can formalize that trade?
Sure. Well, I think we should learn from the success of other countries and the approach they've taken. Say, for example, China, right? If you just take the 3-4 countries that border us to the north, right, that are landlocked, can access to ports, so on and so forth. That's a 60 million person market. Now, the reality is that trade across there is very informal. There's a lot of costs associated with that, so on and so forth. The Nigerian government, could take the approach of China, where they actually have strategic investments actually in those countries to make it much more competitive for Nigeria to export regionally. And by doing so, we are able to really dominate those markets, and adding, if you add 60 million people to the population of Nigeria, that's basically that's almost an entire United Kingdom, almost an entire France, so on and so forth, that you have a captive market over.
Sure. And that strategic thinking really is what I think will make a huge difference. But we've already made the point that, there's only so much that the commercial banks can do with the very small companies. But as we're trying to get Nigerian companies to be leaders in the region, I just want you to speak to that opportunity. We've seen that already happen in sectors such as cement. We've seen some of the banking institutions also begin to dominate in the region. How can we get banks to support relatively large Nigerian companies to be also dominant in the region?
Okay. Before I answer that, let me say that what is the ideal, what we should aspire to, is a situation where we actually have no barriers to movement of goods and services and people within the region, because then that is when you will unleash the efficiency. And if there are any inefficiencies in any point, it will be computed away.
Sure.
Okay, so while we are talking about what we can do to make regional integration better, I just want to put on the table that what would be ideal is a situation, like Kola said, when we learn from the success of other people, like in Europe, where you have a common market, because then you are actually able to unleash the efficiencies in the region. Now, back to the question around what can be done to improve the support that we give to local companies to enable them to be more efficient as they do the interregional trade. The first thing is around ensuring that you have a good network, correspondent bank network, to be able to ensure that their goods are able to be transmitted to those areas, the destination areas, in a very effective manner.
Sure.
So, and it's ironical that sending goods to somewhere like Europe or maybe in the Americas, because they have very formalized channels and networks, you find out that when the trade is between, let's say, 2 West African countries, you end up experiencing a bit more difficulty because our channels are not very developed. So we as a bank, we try to work with some of our correspondent banks that are strong in the area, the likes of EcoBank, the likes of Citibank, to ensure that we provide that network facility that's able to ensure that this trade goes on in a very, very effective manner. We've talked about the financing bit of it, which is important, but thanks to people like BOI, they are able to step in, even though Kala does not agree that there is any need for such activities. But we know that companies find it very useful, and BOI has been able to step in and provide single-digit interest to companies that are involved in areas that the government consider priority, and we've seen them to be quite successful in the area.
All right.
Yeah.
Kora, did you actually disagree? I guess you gave a different point of view.
Slightly.
But do you want to comment on that point before we move on?
Sure. I think there's a time and place for subsidized capital to help to build up nascent industries, to ensure that it can take an industry to a certain point where it creates some economies of scale. But on one hand, if it's not thought about critically, it can actually hinder the growth. Because if that subsidized capital is now crowding out other investment that wants to come in, then at some point the industry becomes the growth of the industry becomes capped, right? And then they can't access the commercial capital they need to scale. The truth of the matter is that Nigerian government lending off its own balance sheet, providing subsidized capital, it can do a lot, but at some point, if you look at the scale of the capital that's required, we need to crowd in other capital. And just two quick numbers. If we look at Nigeria today, 84 million hectares of arable land.
Sure.
We typically finance roughly about $1,000 per hectare of working capital to finance the full farmer's needs, not just inputs, but everything from inputs to marketing, storage, so on and so forth. So that's $84 billion in working capital that's required. If you look at, if you conservatively estimate that you need to process about a little over a ton per hectare from that, now translates to about 100 million tons. Roughly, back of the envelope, about $100 per ton in capex to invest, $100, $200 per ton in capex to invest in. That's another 20 billion, right? So we're talking about somewhere between $100 and $110 billion that we need to catalyze to truly unlock the full potential of our agriculture sector. And unless we are able to create systems to crowd in capital that to address that, we're not going to get very far.
Right, I hear you. Okay, but speaking on the point about making Nigerian companies lead in the region, so we're talking about relatively large companies and the opportunity for them to get even bigger. How can the policy environment support that, in your view?
So this is getting bigger in the region?
In the region, yes.
In the region.
Because typically, many will say Nigeria is already a leader. About 40% of the trades under the ECOWAS trade in liberalization scheme, I understand, actually comes from Nigeria. So we're already there, but obviously there's still an opportunity to dominate further.
I think there's definitely a very strong opportunity to dominate from a trade standpoint.
Yes.
We have to recognize that Nigeria is 50% of the population in West Africa, right? So the opportunity for us to leverage our large economies of scale internally to now become a dominant player on the trade side in the region, which I think goes back to my comments there around Nigeria getting a little more strategic and saying, okay, how can I invest in the necessary infrastructure to ensure that I can better than Ivory Coast, Ghana, Benin, Togo, ensure that products from Nigeria get to Burkina Faso, Mali, Chad, so on and so forth, cheaper, faster than anything else. And that, I think, is where the efforts need to be focused
that obviously is the big opportunity. You want to add a point on that?
I think from a policy standpoint, one of the things that I've always wished we will see traction around is some strategic thinking around really where are we strongest and how do we play best to our strength. I talked about cocoa earlier on. Again, I know that countries like Cote d'Ivoire, to some extent Ghana, I think they are more advanced in cocoa production. They have stronger structures, tested institutions that support the activities of their cocoa farming and export. So what I would prefer to see is around Nigeria looking at, even on the agricultural side, where maybe out of climatic peculiarities that we are best positioned than the rest of the people, and then putting institutions and policies around ensuring that we are most efficient at playing around that area, such that by the time those products hit the international market, of course, it's coming at a rate that will make it competitive. Of course, the time-tested issues around power, around infrastructure, of course, have to be factored in. But if we start from that basic premise of ensuring that we play to what nature and maybe other peculiarities imbues us with, I think we will be better.
Right. But beyond playing to the comparative advantage, I'd like you to speak to this point, Mr. Alagunju, about maximizing the already established partnerships and trade relations we have with the rest of the world. And now we know a huge chunk of imports into Nigeria are coming from China, Europe, and of course the United States. And incidentally, we've heard about these Nigeria heritage cities that are being planned by the government in Jeddah, Houston, and some other parts of the world. That speaks to the opportunity to locate areas where Nigeria already has a relationship going, and we can begin to establish those non-oil export links to. Can you speak to that point?
Yeah, you're quite spot on. We're already in the Hajj season, for instance. Millions of people go to Saudi Arabia every year. Thousands of Nigerians go there. When they go, they crave for African food, they crave for Nigerian food. And that's a huge market. Where we, and when I travel, for instance, and I stay in the hotels, and I see a lot of the fruits, these are fruits that we can grow in Nigeria. Watermelon, pineapple, orange. But they are not coming from Nigeria. They are coming from some other African countries. So these are natural areas where we can leverage, like Houston too. Huge population of Nigerians. Some years back, God bless the soul of Professor Adefuye, the Nigerian ambassador, former Nigerian ambassador, late ambassador to Washington. We were planning some tours of U.S. cities where we have a concentration of Nigerians, along with the U.S. Exim Bank, right, to see how we can increase businesses between Nigeria and those countries, particularly the diaspora population. They know those countries. And the investment opportunities in Nigeria are enormous. And the returns on investment in Nigeria are much higher than in those countries. They can invest in Nigeria and export to those countries because they know both sides. So those are areas where we need to tap into our diaspora population. You run into millions. All right. And they present business potentials and opportunities for this country.
Mecca, what are you seeing from a banker's perspective on this point?
Well, I think so far the banks are not, we don't have any specific interest in maybe supporting any specific crops or products. What we are most concerned about is the consideration around who we are dealing with. So what you will typically see the banks do is to get involved with the players that are tested and strong, those who have financial capacity. Today, I know that most of the banks that are involved in primary agricultural activities are doing that with the likes of Dangote, with the likes of Bua, with the likes of Wakot. Because those are the people not only who are tested somewhat, but they have the capacity to be able to take the risk of that particular industry. I'm also aware that there is a government program in place to support those people around some targeted products. And let me give you a bit of background. Today, one of the key things that we are struggling with as a country is our huge import bill. And when you try to disaggregate that, you find out you are dealing with really 4 or 5 key items. Before, it used to be cement, but that has fallen off because of the local capacity created. Today, we have rice, we have sugar, we have wheat. Okay. So in the wake of the deval crisis that we had the other time, what the government tried to do is, how do we create substantial capacity locally to be able to ensure that once we deal a blow to these particular lines of demand, we will see a reduction in our import bill. So there is a program that brought these people into play, and to a large extent, if those activities, if those intentions are actualized, I believe that in the next 3 to 5 years, you will see a noticeable dent on the volume of import bill that we present as a country.
All right. Kola, can you speak to value addition? I want us to begin to talk about that before we round up. It's something that appears to be a great idea, but when I hear about the challenges that businesses, any business doing operating in Nigeria right now faces with, especially infrastructure, is it a far-fetched idea, or do you think that there's a smart way to deal with this?
So, hands down, it's a good idea. The question is around timing and when. You know, once again, I always like to learn from what others have done. Sure. So fundamentally, the path that most people have taken is first they focus in on how do I get my farmers to be highly productive.
So primary products.
On 1 square meter, my farmers are producing more cost effectively than most anybody else. Typically, that happens best in countries where there's a large domestic population, so they're able to serve that large domestic population and generate significant economies of scale. So I'll give a specific example. 1980, Thailand and Nigeria and Sub-Saharan Africa had the exact same per capita GDP. Today, Thailand's is 4x ours, right? How did they do that? They started focusing on productivity in the early 80s. They devalued their currency to even enable their local production to be even more competitive on the global stage. They got to the point where they had were so competitive they were major exporters of raw commodities. And then once you're a major exporter of raw commodities, then it makes natural sense for you to now start forward integrating into processing. They attracted a lot of FDI from Asia, Japan in particular, and started investing in agro-processing. And then now they were able to build off that strong base of agro-processing, invested in good education system that then enabled them to move into higher value manufacturing industry. Today, Thailand produces 2 million cars a year, more than the UK, and almost as much as France, right? So that's the path. I think oftentimes we try to jump too far, too fast, without thinking in a stepwise strategic manner.
Do you want to reflect on this point?
Well, the statistics are quite impressive. We missed the boat, like you rightly pointed out, in the early 80s, but it's never too late. It's when you wake up that it's your morning. If we start getting our act right now, and we don't play lip service with diversification, because when the structural adjustment program was launched in 1986, 30 years ago, it was a response to the shock. Due to collapse in oil prices, we didn't have enough dollars to foot our import bills. We talked about diversification, but immediately the markets recovered, we started having more dollars, we forgot about building local capacity. So what we need to do is to build our production capacity. We need to domesticate our production capacity.
Right.
The structure of our economy must be more, right, internally supported, propelled, rather than external.
Right.
That's the best way to go.
But you're a local DFI, and many look to DFIs to help bring credit enhancement, to improve the environment, to bring perhaps even insurance. Can you speak to the type of support that DFIs can bring to bear as we're trying to increase our non-oil exports?
Well, like he said, let's borrow from other countries. In China, in Thailand, we studied their DFI model. They support most of these initiatives considerably. And they do this by blending government capital, which is usually at zero cost, with other resources from other parts of the world. So by the time you blend them, they arrive at a lower average that increases access to capital. And then insurance, like NISL, for example, that was brought about by Dr. Adesina and Governor Lamido Sanusi of the Central Bank.
Yeah.
We have an MOU with them, and substantially they agreed to de-risk most of our investments across the agricultural value chain. So the more support we're able to give to our entrepreneurs to cushion the vagaries of the environment in the medium to long term, that would considerably help. And more of these initiatives are coming. We're thinking outside the box to see how we can support our potentials, our entrepreneurs. A huge population can be an asset, can be a liability. But it's only if that population is productive that it can be an asset. And then we have a positive variance between the GDP growth and the population growth. Where the GDP is growing at about an average of 5 to 7% per annum, and the population is about 3%, that makes sense. But what we had last year, where we had a recession, a continuous drop in GDP, and then the population was still constant, that's when we begin to have challenges.
Right. But let's now talk about the partnership between the DFIs and the commercial banks, and maybe you can speak to this point. Because at the end of the day, I think there is something that they bring to the table that now allows you to begin to play in these very critical sectors.
They bring liquidity, which is important. They bring policy direction because they tend to point the banks to the areas that they want to support, which of course will be in line with where the government policy is going.
Yeah.
But the liquidity bit is very important because what you find out today is that banks are able to punch above their weight when you have such kind of DFI support that is coming. So that is one of the key things that they bring, and of course the policy direction. But let me take you back a bit to the value addition that you talk about.
Sure.
Because I was looking for an opportunity to chime in on that.
Yes, please go ahead.
Our experience shows that is best done only at aggregation level, because then you'll be looking at being able to perform at acceptable efficiency levels. You need to be able to have the capacity to invest. You need to be able to come out with the unit product that will be competitive in the international market. And unless you're able to aggregate and create that economies of scale, you will not be able to succeed. There is an example that comes to mind. There used to be this instance where the brewing companies in Nigeria give contracts to some entrepreneurs to get them starch from processed cassava. Okay? So, and over the years, this hasn't quite succeeded. And when we dug into that, what did we find out? These guys have this contract arrangement with farmers. They have the processing capacity. They put up the plants. But what happens is that by the time that they collect the cassavas from these farmers, by the time they take it to the plant and process, because of the loss in yield between the point of aggregation and the point of processing, they get not up to 30–40% yield. And by the end of the day, the banks get into trouble because they are not able to be able to pay the loans. So what the brewing companies did over time was they found out that it was better to give this to somebody who will be able to aggregate at a higher scale. And they are not able to make the investment of putting money into pre-processing capacity. So what happens today is that from the point of the farmers, once they get these cassava tubes, they begin to process them, okay? Pre-process them, make sure that you trap in the yield, and then take them to the processing point, okay?
Which is obviously a very deliberate approach to, addressing this.
That has recorded better success. And now most of the banks that got involved in these projects are able to do a better job of it, because these guys are able to trap most of the yield and are able to take it to the market, and of course the financial model of the project.
And in terms of being deliberate, and I want you to speak to this point, Kola, because we do know that there have been some in the past special zones created to really drive agriculture in the country. Could that be some form of aggregation that could make value addition businesses more competitive?
Definitely. I think the main driving point behind some of that those initiatives were to help to overcome some of the infrastructure deficits by concentrating infrastructure investments, because we can't build infrastructure across Nigeria all at one time. So that is a good idea, and then also I think has the additional benefit of also creating an environment where you now create significant increase in demand within a certain area, which has the knock-on effect of improving pricing, which then has a knock-on effect to stimulate more investment in productivity enhancements, which will enable that whole system to become self-sufficient and competitive.
Gentlemen, thank you so much for joining me for this discussion. On that note, we've come to the end of a panel discussion on how Nigeria can grow its non-oil exports and add value to commodities. My guests have been Emeka Okonkwo, Executive Director, Corporate Banking and Treasury at Union Bank. Kola Masha is the Managing Director at Babangona and former Technical Advisor to Nigeria's Agriculture Minister. And Waheed Olagunju is the Executive Director for SMEs at the Bank of Industry. And thank you for watching. I am Wole Famrewa. See you next time.